And today we're going to have a little fun, and we're going to talk about bonds. And I'm going to make your time worth your while because I'm going to show you a trade. And it's funny, people ask, oh, what's the setup? What's the, give me the trade. Well, I'm going to give you a fun trade that I like to do most mornings. And if you're available at this time, it's a trade that pretty much works like clockwork, and it's not hard to pull some money out of the market. But before I get started, I got to do the old disclaimer. You've probably seen this 1,000 times. It's almost ridiculous. I'm sure that that's how you feel. But we got to put it up there. I'm not going to read it to you. You guys can read it. You've heard it 1,000 times. And I'm not trying to bore you with this. But I will say something. And this is probably will shock some of you guys out there. But, yeah, trading's risky. But you know what I like to do? I like to trade other people's money. Then I don't risk my own. And then I never lose my own money. What a crazy idea. Well, that's the way I like to do it. I believe you should never risk your own money, and you should learn, win, lose with other people's money. But I'm not going to get into that today. For those who get my bond course, I'll probably help you answer that question because most people are undercapitalized. And yeah, I would love it if I could show up to a casino and bet with other people's money. How fun would that be? I would still only play roulette because roulette you have 48% odds. So anyway, that's the way I like to trade other people's money, win, lose, and that way you don't risk your own money. That's a smart way to do it. You do it in real estate, right? Well, why not do it in the trading world? So I'm going to get into how to day trade bonds. Now, I know a lot of people, when they hear about bond trading, they think, oh, you got to be a very sophisticated investor, and I don't understand the math behind it, how much money I have to risk, and get into all that kind of stuff. Well, I thought the same thing before I got into bonds many years ago, but it's really not that hard. It's actually pretty easy, and what I like is the 30-year Treasury bond futures. And I know you've got the 5-year, the 10-year. I like the 30-year bond, but here's why. The symbol is ZB, and they expire on a quarterly basis, which is kind of nice. You trade oil, you trade gold. They expire every single month. What I like about the bonds are they just expire every 3 months. Off you go. Let me give you 10 reasons why I like to trade bonds, and I'm pretty sure after you see these, you're going to say, what in the world am I trading these other things for? Well, the margins are only $500. Now, it depends upon who your broker is. If you use TD Ameritrade, if you use Fidelity, they're going to charge you a heck of a lot more. If you use a futures broker, like I would recommend, well, they're going to charge you $500 to trade one contract of the 30-year bonds. Every tick, which is an increment, is $31.25. Ooh, people who are trading the YM are getting excited. When you trade the YM and other things, you might get $5 a tick. Those who trade oil, you get 10, but just think, $31.25 for every tick you get. Not bad, huh? Not bad at all. So let me just show you what I'm talking about. I'll put my screen up real quick and show you what a tick is, because there's some people who have no idea what ticks are. Hey, that's cool. You know what? I'll show you what a tick is. So if I go from, let's say, 158 right here, if I go from 158, and I just simply go from 158 to 158.01, guess what? That's one tick. That's it. That's one tick. Which is how much money? $31.25. Look at just that little movement from there to there. It's $31.25 on $500. Not bad. What are you trading? How well is it paying you? Something to think about, right? So that alone is pretty enticing. That's pretty strong leverage, wouldn't you say? There's plenty of volume, and that's really, really important. You want to trade something that's liquid, that you can get in and out of, that the bid and the ask are very, very narrow. You don't have that problem with bonds. And the chart is not as sporadic as oil and gold. You ever get into an oil or gold trade and they throttle up, which means they just pour the volume in and whips everyone out sometimes? You don't really have that. You see, the bonds are really more, I would say that they're very orderly and less, less sporadic, right? Oh, hey, the YM can move big, William. I love the YM. Big swings, big moves, and it's a great vehicle if you're a brand new trader and you don't want to take a lot of risk. Now, if you're a seasoned trader, you can get some big swings. So, but I like the big thing. But yeah, that's true. You always risk the same amount. Risk and reward are very important. Good feedback today. I like when people chime in. That makes it a lot more fun. Breakouts work better with bonds, and I'll show that to you later. So the 10 reasons why I keep going on is they're great for day trading around news events and certain times of the day. Now, bonds can get into a time where you just want to sit back and just do something else, which is kind of nice because I like to only trade a very short period of time every single morning, and I don't like to watch something all day. I like to be in and out. I like to trade anywhere from from 5 minutes to maybe 2 hours at most, and then move on and do something else. Because I tell you, when you trade, it's just as if you're playing a professional sport, and you got to be on, and to be on all day can be a very challenging thing. The next is it's a reliable leading indicator. Bonds, the 30-year bond is a great leading indicator. And for those of you who trade gold, if you trade the S&P 500, if you trade YM, you need to have your bond chart up because you'll see inverse relationships and correlating relationships when bonds move, especially if you're in an S&P 500 trade. If you're in the S&P 500 trade, I would highly recommend having a small bond window chart up, maybe 5-minute, maybe a 10-minute bond window of the 30-year bonds, because it can show you if you should take more on a trading move or not, because you'll tend to see the bonds break out before the S&P 500 will. So it's a great leading indicator. And here's a big, and I kind of already caught on this a little bit, but it has less games being played. Now, I love trading options, but what's the downside of trading options when you got to deal with those darn market makers? Fighting back and forth for 1 or 2 cents or 5 cents, and not always getting filled, and having a wide bid ask. I mean, there's some pretty frustrating things, and they play games with you a lot when you trade options, and when you trade stocks. I mean, gosh, the games that the computers play with you are enough to make you go crazy. So with the bonds, it's much more orderly. There's less fake outs happening. There's less, those whip out moves and that kind of stuff. It's a very orderly traded future, and it makes it a lot easier. And it's easier to make $1,000 on one contract compared to oil. If the bonds, and basically, if the bonds move 31 ticks, guess what? You just made $1,000. Not hard, right? And very low slippage and good fills. So let's talk about all the math about it, because once I show you the math, it's not going to be that hard to want to get into this, because once you know the metrics and stuff, it really helps. So the oil, if you trade oil, what do most brokers charge you? Futures brokers, they charge you what, $1,000, $10 a tick. Yeah, I'm sorry, it is 32 ticks. That's right. Sorry, 32 ticks. The S&P 500, $500 margin, and you get $12.50. The NASDAQ NQ, $500 for $5. Bonds, the same $500 buys you $31 Hold on one second. Says you mentioned volatility, but can it be traded within 2 or 3 hours or pre-market? Ooh, Ron, sit back and relax, buddy. I'm going to show you a trade in a few minutes that will absolutely pique your interest, and it's potent, it's powerful, and it's on time, which is what I like. So look at the leverage you have with the bonds. $500, you make $31.25 for one tick, one increment in the move. You're going to love that. So you get your biggest bang for your buck. So the metrics, now I personally believe that it's safer. And when it comes to, let's go back to your Van Tharp days. How many of you guys remember Van Tharp? He has a good course on R values, which means risk. Everyone should really understand risk before they get into trading. If you trade 2 contracts, it's actually safer to trade than one when you look at multiples of trades over time, and getting multiple returns on your money. So when I trade, my first target is only 4 ticks, which is $125. Just think, all you need is 4 ticks, and you made $125. Not bad. Target 2 is anywhere from 8 to 24 ticks, which is equal to $250 to $750. And I will generally see the bonds move over 40 to 50 ticks a day in one direction. Now my initial risk is only 4 ticks. That's what I like about the bonds, is because it's so orderly and because it's so tame, I should say, you can have a very reasonable stop. Now when I get into an oil trade, I have to give it 8, 9, 10 ticks sometimes initially, because you get the splatter effect. You guys know what I mean when I talk about the splatter effect? You get into a trade, and I guess the only way to show you is when you get into a trade, it does this on you. It goes up, down, in about 4 seconds, and it goes woo, like that, and then it kind of settles, and then that kind of moves normally, right? That's what I call the splatter effect, and you gotta stay outside of those that range of splatter, so you can get taken out unnecessary. I wouldn't call it chop per se. I would call it the necessary amount of room you need to give it when you get into a trade, or otherwise you're going to get smacked pretty fast. Having 3 or 4 tick stops on oil kill you every time. So there's not a big spread at all on that. Dan, we got a good group here today. I love the questions. This is great. Keep answering them, guys. Great comments. I got some good, intelligent people here today, guys and gals. If you're a risk 4 ticks and your target is 4, yep, that's right. Well, let me get into that in just a second, because I want to talk about that too. Because here's the thing with bonds, is our objective is really to get this multiple of 8 to 24 on your second. That's what we're trying to accomplish. But at the same time, taking a 4 tick target, we can get ourselves in a risk-free trade very, very quickly. Because here's the problem with trading, and we try to address this when you get into a trade, and that's psychology. You see, if you can have your trade encompass psychology, that's going to help you a lot. And what I mean about psychology is, I would say most traders, 70–80% of traders out there, their psychology is terrible. And they get beat up, they get chopped up, and they can't even get on the bike again. And they're very, very skeptic. So when I first teach people how to trade, we try to handle the psychology part and heal that part. Because I'm not a psychologist, and I'm not going to tell you that I can train you psychologically as a trader. But if I can encompass that in my trading plan and start to chip away at all those hundreds of trades that you've had in the past that you've lost on, and when you think, oh, next time I get into a trade, I'm going to get smacked around. Well, if I can put you in a no-risk trade most of the time, how's that going to affect your psychology? That's going to help you quite a bit. And then down the road, your first target is actually 8 ticks to 10 ticks. And then we keep moving it even larger because you're growing as a trader. So does that make sense why I do that? It's just for purely psychological reasons. Because, you know, I jump around for fun into a ton of different trading rooms, and I see these people just get smacked around. They lose 2 or 3 trades, and then they get a big winner. You know, most people can't handle that. And you gotta be realistic, right? So risk reward, we're going to risk $250 to make $875, which is a 1-to-3, even a 1-to-5 risk reward ratio, and that's really important that you do that. Okay, open versus news. Now let's talk about this. This is now my charts are done in Central Standard Time because that's where I am. I'm in the Central Standard Time, but for most of the slides here, we're going to use Eastern Standard Time just as a default for everything we're doing. So Eastern Standard Time, New York time is what we're talking about. Now the bonds open up at 8:20 a.m. Eastern Standard Time, 7:20 Central for you guys. Now you West Coasters, what is this, 5 in the morning? Is it 6 in the morning for you guys? So it's a pretty early day, getting up at, what, 5 in the morning? And I understand. But that's when bonds open up. I'd prefer bonds open up at 5 a.m. my time, wouldn't you? So now if there's news, we're not going to use the open. Does that make sense? So if there's news, we're not going to use the open for this trade. Now, bonds do trade all the time. They trade the Globex session and all that, but they have an official open and they have an official close time. And it's best to trade them when they're open and they have the liquidity. That's what we're looking for. So the trade I'm going to show you, if there's news that morning, and I'll try to, you guys, I'll show you a site where you can go and look at the news. But if you look at the news and there's news that morning, then we're going to take this trade at the news time, not at the opening time. And the open on bonds is 8:20 a.m. Eastern Standard Time. And if there's no news, we just trade it at the open. So pretty much Monday, Tuesday, Wednesday, we'll take the 7:20 open, or 8:20 open. And if there's news on Thursday and Friday, we'll move that to 8:30. So just keep a note of that. Where we find our news is at NASDAQ.com, markets, and then U.S. economic calendar. And let me see if I can find that site for you guys. Where is it? There it is. I will find it for you guys. I'll show you the site. Real brief. I'm sure most of you are already familiar with it. Very common site, but what you want to do is if you come to the news site and go to news and then go to economic calendar, that's what you're looking for. And then more specifically, if I see anything in red like that, that's a news event. If I see stuff in green like this at or around within 10-20 minutes of the open, that's the predominant thing. But Anything green or red, if your underline is trading that, then you've got to be pretty adept to what's going on there. So just keep that in mind also when you take this trade. All right, so let's talk about this trade, and I'm going to first show you the trade in an abstract form, and then I'm going to show you the trade in examples on a real chart, and I will talk about charts from today or yesterday, not 3 years ago. So it's very, very relevant. So let's get started on that. All right, so first thing I'm going to talk about is AA. I don't know what that means there, D. Unless you're from Canada. All right, so my chart that I'm going to show you guys is a 1 minute ZB chart. Okay? And it's a 1 minute chart on ZB, and that's the 30-year bonds. I'm going to have a horizontal line drawn, and this horizontal line is going to represent 8:20 a.m. Eastern Standard Time. Each line that I draw is going to represent a 1 minute chart. So we're all on the same page. I'm going to go slow, so we're all on the same page. So here's what I like to do on the bonds is prior to the 8:20 open, 5 to 8 minutes prior, bonds will start trending and start to go sideways. Okay? And I'm just using a standard bar chart. Now I prefer to use candlestick charts. So prior to that, prior to the open, this represents the open, right? What we'll do then is I'm going to put a horizontal line. Here, I'll do this in green. I'll do this in green. I'm going to put a line like that and a line like this. So I'm going to bracket the high and low 5 to 8 minutes prior to the open. See, just before the open, it's kind of like the calm before the storm. Things tend to lighten up a little bit, and the reason why is because at the open, you have orders that were placed the prior night or at a prior time that open up or that will be executed at the open, and you get sporadic movements at that time. And what you do is you have hedge funds and you have banks and people from China, from all different countries, where based upon what the opening price is on the bond, the 30-year bonds, they're going to be buying or selling that bond. And that's going to cause a huge movement in bonds right after it opens up. And that's what I'm looking for. So what I like to do, and I'll do this in blue, let's do this in red, is just before the market opens up, 1 to 2 ticks above the high, here's the high, right? Here's the low of this range. I'm going to place a buy order here, and down here I'm going to place a sell order. It's called a bracket trade. These are, and again, each one of these bars is what? It's a 1 minute bar, and I will start drawing these brackets anywhere from 4 to 6 minutes prior to the open. I'm going to draw the support, and I'm going to draw the resistance. Then when the market opens up, we're going to have all these orders that were placed the prior day, overnight, that are supposed to execute at the open. And what do you think it's going to do? It's going to move up or it's going to move down. Now, do I know which way it's going to move up or down? No. I have an idea. I can tell you what I think. But we're going to get a big movement. And here's what I'm going for. What I'm trying to accomplish. Let's see if this will work. Let's see if yellow's a good color today. If I get into a trade short right here, my first target, that's probably not a good color, is it? My first target is going to be what? 4 ticks. And I'll be honest, it's almost like shooting fish in a barrel. My stop, and it's very important that you have risk management, your stop is going to be 4 ticks. See, here's the thing, Jen, is there are times you're going to get stopped out. Nothing's foolproof. But what's cool about trading bonds is I can have a 4-tick stop. Not 8, not 10, not 15. I mean, it's pretty cool. So I like having small risk and letting this thing go. See, the bonds don't play the games like you're used to seeing. So you're used to seeing trades that you get in, you got to give it a lot of room to move, and all of a sudden, you know, either moves or it doesn't. You get stopped out big, or you start taking your trade, right? That's what you guys are used to seeing. So it's a trade where I can have limited risk and have big upside, because it's one of those things where it generally just starts moving up there. I'll show you today's trade. I'll show you that in a little bit. But I want to talk about this without a chart first. So the cool thing is, and let me just give you some other rules. Once it goes 4 ticks, your stop is either at even or -1. So once it goes 4 ticks, that stop starts to move. Once we get up to our 8 to 10 tick target, then we're going to have about a -6 stop, and we're going to have some room to move. 5 ticks is the general wiggle room. Do you guys know what wiggle room is? Let's say for fun this thing decides to go up, like so. Well, every time it goes from its high to its low is around 4 ticks. Now, if volatility increases in the market, it'll be bigger than that. So you only have to give it around a 6 tick trailing stop on that trade, which is pretty cool. Okay, so let's talk about this. Now, one other quick thing is if I go short right here, and it comes down a little bit, whatever, and then it decides to head back up, yes, I'll get stopped out, what, -4, maybe -3. But I keep my other side on. So if I get stopped on this side, the other side is where I'm going to make my money. Okay? Most of the time, the majority of the time, it will just start taking off in one direction. Okay? So now we've talked about it. Let's actually take a look and look at some real charts and make this a little bit more back to normal. Okay, so here is what I'm showing you guys. I'm going to back up just one more minute so you know what I'm looking at. Now, I personally like the bar charts. Okay, so here's what we're going to do. So I'm going to get into a trade, and I'll do some black. And again, what you're looking at is a 1-minute chart. So each one of these bars represents 1 minute. And I like to use candlesticks, right? So here's what we're going to do. Let's back up. I'm going to make this real big, almost real obnoxious, but I want you guys to get it. I'm just doing that on purpose so that we have everyone here. There we go. You like that better? Okay, so look at this. We're going to mark the high and low. Now, at the bottom here, it says 7:20. That's because I'm in Central Standard Time Zone. Okay, Eastern, it's 7:20 Central, where I'm at 8:20 Eastern Standard Time. Okay, just keep that in mind. That's why that is. So don't get thrown off by that. This is actually, I'll put it down here. This is Central Standard Time, and that's significant because if you're trading this in the wrong time of day, you're not going to do so well. So what do? We're going to bracket, and I just manually drew these in. The low, there's your low, and there's your high. Anywhere from 4 to 8 minutes prior to the news. Now keep in mind that you see how this consolidated here, 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 and here? We like that. When we have clusters together, that tells you where the range is, okay? And this was the low. It came down here, put in the low, and created that, right? What day is it? Oh, it's the 5th. Okay, I'll do today's in a little bit, okay? I'll do today's after this one. I want to show you the concept first. So here's the range. So this range here, this big range, is where it's trading sideways. We place our buy order right up here, and we try to put our sell order right there. Okay. A couple minutes went by, and then bam, we got hit here on a trade. Now, the bonds don't move as fast as oil does. Bonds don't move as fast as what you're used to. They're a little slower. But I'll tell you what, they're profitable. And look at what just happened. Price went from, let's see here, from 01 down to 25. So from 01 down to 25, that's about what, 9 ticks. Now it took 1, 2, 3, 4, 5. It took 5 minutes for that to happen. Okay? So there's your nice move for the day. Thanks for coming to work today. That's what we're doing. This, and see how well it stayed on this range? When it stays in a range like that, you know it's ready to explode. Okay? Why not put buy and sell at range lines? Because if I do, I'm going to get whipped out. If I put my order right on these lines, I'm going to get whipped out more often, okay? Okay? Let's go to today, because that's a big question I had from a lot of people. Okay, today. Let's do today. I'm going to back up a little bit, get rid of that. And let's look at today. A lot of good questions from people today. Yeah, today's a little choppy, okay? You're going to get days like today. Let me show you how to trade them, though, okay? I'm going to, 7. There we go. Let's talk about today. Okay, where's 720? Right there, right? Excuse me. So what do? You draw your lines prior to news. There's prior. And there's one right there. Okay? No, I do not do an OCO, Whitney. Do not do an OCO. Because here's what can happen. Sometimes you may get filled here, and then it just takes off to the upside. I don't do that. Put them both out there. So here's what we're going to, so again, let's talk about today. Here's 7:20 Central Standard Time, which is also 8:20 Eastern Standard Time. And I'm on 8:06. Oh, I'm not even on today yet. I'll get there. I will get there. This is yesterday's. There's your entry right there. And there's your drop. We still had our buy up here, okay? So here's what took place, is we went short here. Am I not connected to my data feed? That may be the problem. Let's make sure I'm connected. Yeah, I'm connected. All right. So there we go. I mean, nice trade. 1, 2, 3, 4, 5, 6. 6 ticks trades up. 6 ticks on that trade. There's 6 ticks. And guess what? We kept this one up here, which would get us in here. 1, 2, 3. Went 3 ticks. So what would happen? Well, we'd get 3 ticks. We'd probably get stopped -1. Okay, maybe -2. So we know when to get out, when either our target is hit and we have a 4-tick stop. If price moves in our direction, 3, 4 ticks, that stop gets moved. And I usually like to keep it at a -1 to a -2 stop. Not if you move your stop too early, then it's not good. All right, let's go to today. So you guys like that? I mean, that's not bad. Now think about this. Why isn't it giving me today? I do not have today's info for some reason. Let me try a different. I might have connected to my wrong data feed, so I'm going to give that 1 second. So I do move my stop once I get 3 to 4 ticks into profitability. And you got to do that just because it's a very logical and a very systematic thing that you trade. And if you don't have that, and because of that, you don't need to give it, let's try this. If you don't give it that kind of room, here's the thing, is it either works or it doesn't, and you don't need to give it 8, 10, 12 ticks to figure that out, which is really cool. And I'm not getting today's data for some reason. So I'm having a data feed problem, but I'm not getting today's. Let's go back a couple more days just for fun. Oh, you know what? Here's a good, no, it's today's. Let's go back. Okay, here's a good one, because so here's the thing, is here's what's going to happen some days. And here's the question that all of you are asking right now. Okay, well, what happens? Show me a trade that doesn't work. Or show me what happens when you get faked out. You guys want to see that? That's what you care about even more now, because you've seen the trade and you're starting to get gung-ho and say, yeah, I want to do this. But show me the downside. So let's talk about that, because it's important that we do. So here's a day, and I marked this up just to show that to you guys. This is just a couple days ago. Now, here's what happened. Where would your short be, ladies and gentlemen? It'd be right here. Right? That's your short. Your long would be right here, right? Okay, so what took place? You went short right here. Did it even go into profitability at any time? No, it didn't. What happened? You lost 4 ticks, right? Is that going to happen some days? I can guarantee it's going to happen. I can guarantee that you're going to lose on this trade at some time. But you've got to think the whole trade through. What took place? Well, they brought price right down to this area, right? They came down here. They came right down there. You know what I could do? I could I could do it on my Thinkorswim. I'll do that, okay? So if you went short here, what happened? You got smacked, right? You got whipped, and you got a little frustrated, right? But here's why. I don't remember who asked that. I think it was Jen. I think, why don't you have OCO on? Because guess what? If they come down and price rejects, such as right here, that's great information. What are they telling you? That there's a ton of buyers. There's a ton of buyers right here. Well, that's good information, right? Because if I get in here, right, and I go long, guess what? Up we go. Wait, is it just up we go, or is it do we blast off? Well, we go up pretty well, don't we? Look at that. But you get in here, and here's why I don't keep too tight of a stop, is it only went what? 1, 2, 3 ticks, right? Came back a little bit. That's why you give it some room to move. Up you go. Okay? And there's 12 ticks. That's why you give it. That's why you're not too tight on that. Do you have a minimum number of ticks within the bracket as part of the setup you look for? You know, I want to show you my setup. How about that? Here's my setup. Initially, I have it stop of -4, 4, and then 4 and 10. And then I look for prior resistance and support. And then I have an initial 7-tick trailing, which looks like this. Okay? Actually, it should be like that. Okay? So if this goes 4 ticks into target, I'm still 7 ticks away, and then this gets moved up to -1. So I'm only -3, -2. Now, you have to adjust this a little bit based upon volatility. And let me get more specific on that, because volatility is everything. Really, volatility is everything. And here's one thing. Are you guys familiar with the VIX, which is the volatility index? Is that common for some of you guys? Well, you don't need to be a VIX expert to what I'm going to show you. Okay? If the VIX is greater than 20, guess what? Every trade you do, give 1 to 2 extra on your trailing stop. If the VIX is less than 20, then at 4 ticks, your stop is at -1. Okay? Does that make sense? So I use the volatility index as a method of telling me how much I need to adjust my stops, because, and this is true in most markets, if you're trading oil, if you're trading gold, S&P, whatever. If that VIX starts moving higher, you better, number one, give yourself bigger stops. 2, give yourself bigger targets, because there's just more volatility, there's just more craziness out there, and you have to give it more room to move. Oh, TJ, I actually do this on oil and a lot of different stuff. But oil has different nuances than the bonds do. And those nuances are expensive to learn on your own. But that's why one big nuance here is don't use an OCO. Look, you got faked out down here, but look, it worked here, right? And then it went. It will generally take off in one direction. And I shouldn't say it takes off. It kind of, it's kind of like a freight train. It will start trending and start moving in one direction or not. So I will try to bring up today's with my other platform. And while I'm bringing up my other platform, I will bring up another day. Now let's go back. Oh, yeah, this day was easy. This is more of a typical easy day. And I'm going to bring up my Thinkorswim platform, and because I want to show you today. Everyone wants to know today. How to do today? Well, here's just a few days ago. What's your question? No. This is the 30-year U.S. Treasury. Yeah, if you go to the cboe.com and put in VIX, you'll see it everywhere. Ever tried 3 or 5 minute? No, I only do the 1 minute. The 1 minute bar chart tells me so much information, and I'm not going to even get into that. A 1 minute chart tells me a lot. Dennis, you got to use the tails. Got to use the tails, because what did the tail tell you? The tail told you, hey, we just whipped the heck out of these people. Do I want to get into here in this whip? No. I want to be on the other side of that whip. Because if I'm not, then I'm just going to get whipped again. That's what it taught me. All right, just bring up my platform. See, you can do this in Thinkorswim. You can do it in NinjaTrader, eSignal, multi-charts. Doesn't take you can do this anywhere. This is specific to the bonds, and you can't just bracket any, in my opinion, you can't just bracket any range before a market opens up, because anything you trade has its own personality per se. All right, so I'm going to bring up my Thinkorswim account, and I'm going to put in the ZB. Yeah, I don't like the new setup either. I think they just destroyed it. All right, so I'm going to bring up a intraday. I'll do a 1 day, 1 minute chart. And then let's go to the open. Okay, so here's today. Thinkorswim, I don't know. I've never traded bonds with Thinkorswim. Probably because you're at a disadvantage, in my opinion. Okay, so Thinkorswim, what took place today? Let's mark it up, huh? All right, so let's draw our lines. I'm going to draw a vertical line. 720 today. There's your vertical line there. Here's your opening range, right? And there's your range right here. So what took place? Well, you went short here. Let's do this in white. So you went short here, and you got whipped to the upside, right? You had a long here, and never got hit. But how many ticks away are you? You're 1, 2, 3. Your stop, more than likely, would have been probably a -2, because this is the range, okay? There's your range. I'll do that in white. So your stop would have been -2. You would not have gotten filled long, and more than likely you would not have gotten in on this move at all. So Today, it would have been a -2. And this is a very, very tight range, I've got to say. It's a very tight range. When it's only a 3-tick range, you're going to have a small stop. I'm just going to tell you that. You're going to have a small stop. You're not going to want to have a big one at all. So today, hey, I had a 2-tick loss. No big deal. Yeah, Thinkorswim uses a lot of memory. There's no question about it. So let's go back to another day. Let's keep going back. And we're just talking this week and last week, as far as I want to go back. Anything more than that, I think you're out of touch. This one, I believe I did this one. And let's do this one here. I think I did this one too. Yeah, this one just took off. Off you go. Nice job on that. That just worked well. So again, I'm just giving you a trade that you can have fun with and you can really learn a lot about. Okay, here's another one. This was just last week. A little nuance too. There's your 720. There you go. There's 7:20 in the morning, 8:30 or 8:20 a.m. Eastern Standard Time. And your range would actually look like this. Oh, no, there's your range right there. There's your range. So what took place? Well, price went, you would have gotten in right there, and you would have gotten your 4 ticks. So not an initial huge win, but you got your 4 ticks on your first contract. Price came down here, and it went 1, 2, 3, and so your stop would probably be what, -1, maybe -2. So not a huge day. When I do see this kind of consolidation, where is it? When I do see this kind of consolidation, just a little nuance, I would raise my short to here, but that's a more advanced thing that I'm not going to get into. So that's kind of what I'm looking at. But here's a trade. So here's what I'd like you to do is, if you're interested in learning more about this trade, I want you to then go back in time and start taking a look at how did this trade perform over the last 30 to 60 days. I will generally leave this trade on for about 30 minutes. I will leave it for about 30 minutes, and then after that, I will move on to other trades that I have. Because I like to trade based upon time, and time trades are what I like to do. So here's another day, which took place. Let's draw the line right there. Okay, this was a news day. This is actually a news trade. So this is on a day of news. When news hit, there's your entry. Nice drop. Little bit. It took about 4 minutes. Average on the trade is between 4 and 30 ticks. Is what I'm saying. So when news happens, and I see a news event, then what I'll do is, instead of taking the trade at 8:20, the trade moves to 8:30. And so I'll just move all the lines over, and I'll usually give it 4 minutes prior to news, and I'll bracket that. Okay? 9:29. I don't know if there was news. Was there news on 9:29? Yeah, FOMC days, you got to be a little careful. FOMC days, you got to be a little careful. It can be really, really choppy, okay? Now, see, it didn't move until news. Here's was the news. News happened right there, and your bracket is right there. So if this was a news day, guess what? You had what's called a double header. And a double header is when 1, 2, 3, 4. It went 4 ticks to the upside, and 1, 2, 3, 4. It went 4 ticks to the downside. So you made money here, and you made money here. It's called the double header. That's a fun day, isn't it? So this is one thing that I do with bonds. And I'm just gonna, the big thing I wanted to get into today is with bonds. Yeah, I mean, there's more out there than you think. Now, the question is well, you probably didn't get filled. The funny thing is, here's the difference between trading bonds and trading the S&P. When I trade the S&P, I feel like I'm the last man ever to get filled at a specific price. Most of the time, when I have a price sitting out here at the end, I do get filled. No, I'll cancel that trade after 30 minutes is what I'll do. So you generally will get filled, which is nice about bonds. S&P is so frustrating some days. I'll be sitting out there forever, and I just don't get filled. So yeah, everyone will get a touch no fill. That's common. But you know, most of the time on the bonds, I do get filled, which is really, really nice. So hopefully you've learned a lot, and I want you to start taking advantage of that. So it's a pretty powerful trade. And yeah, you know what? The question is, does it work on the ZN? Yeah, it does. The 5 minute, the 5 year, the 10 year, absolutely. So there's still a lot more to learn, and I don't have a lot of time to show all you guys all that, but hopefully I've given you enough detail so that you can start digging into yourself in your own time and learning this. So the big thing is nuances, ladies and gentlemen. There's nuances with every trade you have. There's nuances with any system, and once you learn that nuance, that's pretty much where it's at. So I want to invite you to check out my 3-hour training that I created on the bonds. It's a 30-year Treasury bond, and I go into a lot more detail, and I show you how. And it's a very, very, very powerful trading vehicle. And I'll teach you 2 specific trades that work very well using the insights you get from order flow. And I want to introduce you to my bond trader and how I trade the 30-year Treasury bond. And what I have in this course is my 2 specific trade setups I use to make a killing on the 30-year bonds most every day, and how to triple your profits potentially versus trading oil. And again, I love trading oil. The best time to make as much as $1,000 on one contract in a single day, and how to keep your losses small and intelligent, and using your proper risk-reward ratio, knowing when to move your stops, etc. The bond trader course, and I also get into why the same trade setups you'll see on the CL, TF, and Q and YM work better on bonds than on these underlines, and which other markets act as leading indicators for the ZB. And I'm going to show you how to predict when price is about to explode in either direction, and when to stay away from a trade and avoid getting whipped out. Register at InvestToSuccess.com/bond. So let's get started today. Now, when you register today, you'll get 2 of the following 2 exclusive bonuses. Bonus number 1 is my order flow X-ray. And in my 3-hour training on how to use the OFA indicator to read order flow and see what is really going on between buyers and sellers. Now, just so you guys know, this seminar does not include the indicator itself. In disclosure, we've actually negotiated a reduced price of the OFA indicator, and we only have it tuned to what we need to use it with. So this indicator, if you choose to buy it, you do not have to buy it, is $500. Now that's a steal because usually they charge $3,000 for this indicator. But we do not include it in this course. But you buy that directly from OFA. We're not a part of it. We'll give you a link with a reduced price on this. Just FYI. What does OFA look like? I'll show you what OFA looks like. Let's see. It's a great indicator. It tells you all the order flow you need to know. What is it? Why isn't that coming up? Let's see if it comes up here. Order flow tells you some pretty powerful things. Very, very powerful things. I'll see if I can get this up on my screen. All right, so it's going to show you where the past BS is and where all the games are being played. It's a $600 bonus. Bonus number 2, 30 days in my time trading room. Watch me take these trades live. And you can join me starting Monday from 8:50 to 10:45 a.m. Eastern Standard Time. Live trading on the CL, the NQ, the ZB, S&P. We trade a lot of different things. And I'm going to show you how to hit your daily trading goal in an hour or less per day. That's a $377 value. So how much do you think all this is worth? Add it up. The Bond Trader online course is $1,000. The Order X-Lite course is $600. And bonus to the 30-day trading room is $377. It's almost a $2,000 value. But don't worry, I'm not going to charge you $1,977 because even though it's worth it, I would say it's worth a lot more. I want to make this affordable and doable for beginners and advanced traders. And I'm not even going to charge you $597, which is what Bond Trader course alone is priced at on my website. So if you sign up today, you get the Bond Trader on-demand trading course along with these bonuses for just $297. And that's a great, great value. So go to InvestToSuccess.com/bond. Now, for the first 25 who register, you're going to get one fast action bonus, which is you get triple the trading room. So you're going to get 3 months in my live trading room with me as your guide to answer your questions. So what we do is I'll take a trade, and then we have downtime in the room. And I don't talk all the time. I only talk when it's important. But if there's questions, and if we want to debrief on a trade, if we want to get into content, that's when we talk about it. That's a $1,131 value. And go to InvestToSuccess.com/bond. Finally, here's why you have nothing to lose. I'm going to back this up with a 90-day, 100% no BS action guarantee. Take 90 days to study the online course. Trade the ZV at least 2 days a week over the next 3 months. And using the strategy taught, and with just a $5,000 in a real or simulated trading account, after 90 days, if you do not generate at least $1,000 in real or simulated profits, show me you at least took some action, and we'll give you 100% refund on the course. And again, go to InvestToSuccess.com/bond. Just 1 or 2 extra winning trades will easily pay for this course. And with me teaching you live in my trading room and my no BS guarantee, as long as you're in sim, you got nothing to lose, and you'll be mastering a trade that could easily make a difference in your bottom line. And at InvestToSuccess.com/bond. Now, I do not recommend trading your own money as an initial trader. See, my objective in my trading room is to teach you also how to use other people's money when you trade. It's very, very powerful, and it's much more psychologically easy to handle if you're not risking your own money. And I will try to bring up this indicator. I don't know why it's not working on this computer, but it's a very powerful indicator. My trading room runs from 8:50 a.m. to around 10:45 or 9:45, 9:50 a.m. Eastern Standard Time. All right, I'm trying to bring up my indicator here for you guys so you can see that. All right, there it is. Let me try a different data feed here. For some reason, my data feeds aren't working too well today. So hopefully you guys have been enjoying. There we go. Let's try this. Hopefully you guys have been enjoying MarketFest today. Let's try this data feed right here. It's important as traders to find a system that really meets your personality. That's one of the biggest things. It's really important. You've got to match the system to your personality. Because for some people, Tom, how you doing? Tom Hammondtree, I haven't recognized the name. Good to see you here. Let me get into this a little bit. You just need a standard futures account. That's what you need. David, Dan will get in touch with you on that. RL, good job signing up. Thank you. I don't have our total right now. We'll probably be, this will probably fill up very fast. Let me go this route with the indicator. I'm not a huge indicator guy. I like to, too many indicators on your chart just leads to confusion. So I'll show you the, all right, here's what this indicator looks like. Let's see. All right. Indicator looks like this. Now I have it set up a little bit different, but this tells me where the buyers and the sellers are located, and it gives me an insight as far as who's in control of the buyers or the sellers. Okay. Just bought it for your hubby, huh? I would love for my wife to buy me courses. I love it. Does the trading room show when to get in and when to get out for trading happens? Oh, he loves bonds. Cool. I will show you anywhere from 2 to 3 trades a day that happen in within an hour's time, and they're very consistent. All right, Tom. Good. We are filling up fast. So looking forward to seeing you guys starting next Monday. Generally start out with a little bit brief of what the market's going to do, and then we'll put our trades and go from there. So it's all pretty cool. Yeah, we'll make sure you don't. We'll make sure that doesn't happen. Yep, we are filling up fast. We're probably getting close. Well, if you enjoyed my presentation, I'd like to give you guys some real meat and potatoes of something you can take with you and on your off spare time, practice, trade, and make some money with. Because I'll tell you, if you can make money with what I'm showing you now, just wait until what I can show you with some more stuff that we do. So, but I want to make sure that your time is well spent here, and that you can go away with some power that, hey, you know, at this time of day, look for this trade to happen. Oh, thank you, TJ. Appreciate that. Thank you, Singletary. Thank you, Tom. Good to have you here. Thank you. Appreciate that. So with that, I'm going to stick around for another minute or two. I am running out of time, though. I know Dan's going to pull my cord to do the room back to him. And looking forward to seeing a lot of you guys next Monday. So we'll have fun. And again, in the trading room, I only talk when it's necessary. I'm not there to entertain you. I'm there to educate you and show you how to trade. If I'm not speaking, that's because there's nothing important to say. And I respect your own time, too, to focus on the markets and not hear some white noise in the background. So that's what we do. So with that, I'm going to send this back to Dan. Thank you for joining me today. And we will see you guys next Monday.